All right, looks like we are live again. So over the last week, there's been a number of very interesting stories coming out about the size of the U.S. federal government budget deficits, the projections, the amount of debt. Last week, we had the U.S. national debt cross over $27 trillion. It is rapidly accelerating. We also had an interesting story come out from CNN Business that the U.S. debt is now projected to be larger than the U.S. economy. This came out on Thursday, October 8th, from CNN Business' Gene Sahadi. As the United States continues its struggle with the pandemic-induced economic recession and a sputtering recovery, the country's burgeoning debt is not anyone's top concern these days. Even deficit hawks are urging a dysfunctional Washington and a chaotic White House to approve another round of badly needed stimulus, aka bailouts, to the tune of trillions. And there's so many different people that all have their hands out, whether it's the airlines or MMT checks. And it looks like at some point they're going to get done. Probably not before, maybe not before the election. We'll see. Because that's a political football now. The Democrats think if they give in before the election, then that means that that helps Trump with his re-election chances. Quote, the U.S. federal budget is on an unsustainable path, has been for some time, of course. Federal Reserve Chairman Jerome Powell said this week. But Powell added, quote, this is not the time to give priority to those concerns, because there's never a time to give priority to those concerns, because both political parties never really cut spending at all. However, when the country eventually pulls out of its current health and economic crises, Americans will be left with a debt hangover. On Thursday, the Congressional Budget Office estimated that for fiscal year 2020, which ended September 30th, the U.S. deficit hit $3.13 trillion, or 15.2% of its GDP, gross domestic product, thanks to the chasm between what the country spent, 6.55 trillion, excuse me, and what it took in, only 3.42 trillion for the year. It's probably going to end up being less than that in the not too distant future. I have a really worried about the cash flow problem in the real economy, and all levels of government tax revenues are going to be suffering, which means that they're going to have to the government is going to have to figure out new ways to tax us directly, besides the stealth tax, the inflation tax, the currency debasement tax, which Keynes said, and one of the few things I will agree with Lord John Maynard Keynes on, that I'm roughly paraphrasing here, that 1 in 1 million people could identify inflation properly. As a share of the economy, the estimated 2020 deficit is more than triple what the annual deficit was in 2019, and it's the highest it has been since just after World War II. The reason for this huge year-over-year jump is simple. Starting this spring, the federal government spent more than $4 trillion to help stem the economic pain. That's officially off balance sheet. We have no idea without actual Fed audits, to help stem the economic pain to workers and businesses caused by sudden and widespread business shutdowns. And most people agree more money will need to be spent until the White House manages to get the global pandemic crisis under control. The Treasury Department put out final numbers for fiscal year 2020 till later this month, but if the CBO, Congressional Budget Office's estimates are on the mark, the country's total debt owed to investors, which is essentially the sum of annual deficits that have been accrued over the years, will have outpaced the size of the economy, coming in at nearly 102% of GDP, according to calculations from the Committee for a Responsible Federal Budget. The debt hasn't been that high since 1946, when the federal debt was 106.1% of GDP. Quote, debt is the size of the economy today, and soon it will be larger than any time in history. CRFB President Maya McGuinness, that's a weird way of spelling that, said the problem, that's not the normal way, like Guinness beer, the problem with such high debt levels going forward is that they will increasingly constrain what the government can do to meet the country's needs. Spending is projected to continue rising and is far outpacing revenue, and let me add here, regardless of political party. Both political parties are pretty much stagflate in tax and lie from here on out. It might be a little bit different with either political party, like Joe Biden. If you go to his website, his tax plan is going to be very heavy, taxing business owners, owners of assets of real estate, like real estate investors, 1031 tax exchange, transaction taxes on people who trade a lot of stocks and bonds each week, each month, and then also capital gains taxes on stock sales, and then also dividend taxes. Joe Biden has enormous hikes on dividend taxes, at least on his website. Now, we'll see if those actually go in or not, but that's what's being proposed. But this is all still part of stagflate and tax and lie. The exact details may be a little bit different from each political party, but unfortunately, we are in the final innings here. Given the risks of and stagflate and tax and lie is the best case scenario, someone actually asked me, what are worst case scenarios in stagflate and tax and lie? He must be new to this channel, because the worst case scenarios are the debt deflation, the debt deflation where there's too much debt and it actually just free market forces and it actually just wipes everything clean, or a hyperinflation scenario. But there's way too much debt. The people in power want more power in the government and the central bank, and it is very unlikely there will be any deflation allowed for more than a very short period of time. We had deflation for all of 8 weeks from about February 19th. I wrote an extensive articles on this for my Patreon account contributors. Over the last like 6 or 7 months, there was deflation for all of mid-February through about the first week of April, and that was about it. In a lot of instances, especially asset price and deflation, where asset prices were actually allowed to fall. Spending is projected to continue rising and is far outpacing revenue. That's been normal for the U.S. government. The U.S. government has been able to run enormous budget deficits for a long time because those dollars are exported out of the U.S., and other countries would hold them, other central banks and governments would hold them as reserves. And then they would also do, if they had a dollar peg or they were managing their exchange rate, they'd also devalue their own currencies. And that helps prop up the dollar as part of the dollar tug of war. And that's allowed the U.S. for decades to get away with running these budget deficits. The way the global financial system, the dollar standard system, and how other countries either peg their currencies to the dollar or manage their own currency exchange rates against the dollar to manage their global trade, often with versions of mercantilism, is done. And interest payments share on the debt, even if rates remain low, will consume an ever-growing share of tax dollars. Given the risks of future disruptions like a pandemic, a debt load that already is outpacing economic growth puts the country at a greater risk of a fiscal crisis, which in turn would require sharp cuts to the services and benefits of which Americans rely on. Actually, they're just going to keep printing it in. This is the difference between nominal value and real value, is you might actually get checks that are worth, you might get $1,200 checks. I might start sending those out with MMT. I saw a Democrat radio show host on Fox News a few days ago, and he was straight up saying, and this is like how brutal voting is, the truth about voting, is he said that whichever politician, Biden or Trump, promises to give the voter the most in MMT bailout stimulus checks, he said if Trump promises $2,400 checks before the election, if he promises to send those checks out as soon as possible, he was like, Trump will win and Trump will get the votes. And he's like, if Biden does it, Biden will win and Biden will get the votes. So I think that was really interesting how, I think his name was Jimmy Dore. I think he was a Democrat radio show host. It's really interesting how he had whittled down voting to whichever politician promises the most dollars created out of thin air, printed in nominal value. And of course, if they start sending out $1,200 checks or $2,400 checks just to people randomly, eventually the purchasing power, and this has been going on for a long time, but people are going to begin to notice that $1,200 or that $2,400, the value, the purchasing power of that currency is going to be worth less. It's going to be worth less than $1,200. Oh, why are my grocery bills? Why are my healthcare bills? Why are the portion sizes at the restaurant? Why are the amount of consumer staple goods at Target or Walmart or the grocery store, why are these things slowly shrinking with shrinkflation? Because it's too much currency creating the same or chasing the same or fewer goods and services. So all this currency and credit that's being created by different governments, it's not just the U.S. government doing this. It's other governments doing it. Okay, there's Brazil and tons of other governments that are lowering interest rates, trying to weaken their currency. They're all trying to do it. Currency wars, man. Read Jim Rickards' Currency Wars book. Great book. Okay, the quote, there is no set tipping point at which a fiscal crisis becomes likely or imminent, nor is there an identifiable point at which interest costs as a percentage of GDP become unsustainable. CBO Director Philip Swagel said last month, quote, but as the debt grows, the risks become greater. So I got in an argument with a longtime podcast listener. He says, Jason, why do you think Japanification is inflationary? and Japanification, which has been going on. All these governments can't do Japanification without dire consequences, especially the US, which is just doing insane amounts of MMT, is going to be doing insane amounts, it looks like, of MMT and UBI. Check out Lynn Alden's Twitter for this chart. There's also a chart of this in the Wall Street for Main Street Facebook group of projected MMT stimulus checks already and then projected ones. It's nuts how many might be projected. But in my opinion, the reality of the situation of people living in, if you believe, first of all, if you believe that all the Japanese government economic data the last 20 or 30 years, I honestly think you still believe as an adult in Santa Claus, the Easter Bunny, and the Tooth Fairy. Okay, I have friends who have lived in Japan for over a decade. I speak to them. They take pictures of food items. One way that you understand shrinkflation and inflation, you have to live in the certain area or go back to the certain area, and you have to check portion sizes and prices. You have to have a baseline to compare things against. So if you shopped at the same grocery store and a year or two later, the price doesn't change or it goes up a little bit, but the amount of the food that you are buying is down a lot, that's shrinkflation or stagflation. So the person who on Twitter, who's a Bitcoiner, who's lecturing me, oh, I went to Japan for a couple of vacations, and the prices are the same as in European cities, and therefore there's no inflation. He's like, you don't have a baseline to compare anything against. You didn't go to the same Japanese ramen noodle house. You didn't go to the same grocery store. You didn't use Japanese healthcare. You did not pay increasing value-added taxes. So you have no baseline to compare these things to. That's why the old CPI data that John Williams of ShadowStats uses, and Peter Schiff and others have talked about this, that's why the old basket of goods was so easy to compare. The current new basket of consumer price index, the types of goods in the basket is constantly changing. Okay, it's not the same basket of goods. If it was the same basket of goods, like a dozen eggs, a quart of milk, the normal everyday consumer items, which is what the Chapwood Inflation Index, and some idiot on Twitter who was trolling me and stalking me for 8 months was accusing me of cherry-picking data with the Chapwood Inflation Index. The Chapwood Inflation Index is not picking out one or two consumer items. It picks out the top 500 consumer items by sales, and then it adds and subtracts things in there. That doesn't sound like cherry-picking data to me. That sounds like a pretty good measurement of the average everyday American's life, the 500 consumer items that they're going to buy the most over the span of a year or two. So just ridiculous. And those items are changing, the inflation in those is enormous. So in my opinion, I went on a long-winded rant here because I think a lot of the topics are important. But in my opinion, Japan, which pretty much all the people I've argued with about Japan for the last decade or so, every single one of them believes all the Japanese government statistics. Every single one, to a T. Every person I've ever argued with about Japan, most of them have never visited Japan. A few of them have visited Japan once or twice, but they have no baseline of living there for a long time and eating at the same restaurants and checking out prices and portion sizes or going to the grocery store or paying value-added taxes there. They have none of this. But almost all of them inherently believe that all the Japanese government economic data, the consumer price index, the GDP, all these things are honest and accurate. And when I speak to people who have actually lived in Japan, it's the exact opposite. So Japan is actually a good case study of stagflate tax lie. And you're seeing that now all these governments are all doing variations and different degrees now of stagflate tax lie. Okay, moving on. There is the AP article that came out on October 8th from Andrew Taylor, COVID. And if you want to understand more about inflation and the history, because those of you who are saying, oh, the deflationistas are saying this time is different, this time it's definitely going to be deflation, you're going against 8 centuries of financial history. There is a book out. It is available on Audible audiobook. It was actually put out during the 2008 financial crisis by economists Carmen Reinhart and Ken Rogoff. And yes, they work for the government. Yes, they're not libertarians. Yes, they're not small government people. But occasionally you get nuggets of truth. Occasionally their research reveals a lot of truth. Carmen Reinhart went on David McElvaney's podcast 4 or 5 years ago, and there was an unbelievable amount of honesty given out in that interview. But they wrote this extensive book looking over 8 centuries So 800 years of government finances, of governments running inflationary problems, hyperinflations, government budget deficit problems, and normally in financial history, the way that governments deal with inflation, deal with too much debt, is, that was a Freudian slip, deal with too much debt is with currency debasement, an increase in the currency supply and credit, or inflation. Or as I like to call it more accurately, stagflate, tax lie. You can also read Lords of Finance, which is how the last empire, the British Empire, lost the world reserve currency over a couple decades and how they dealt with bouts of deflation. That is covered in the book, Lords of Finance, how they dealt with bouts of deflation and unemployment. They had stagflation. They were lying about the amount of inflation in the real economy. They had too many taxes and rules and regulations in the British Empire. And guess what? They did even more government intervention into the economy, and then they layered on even more taxes, even more rules, even more regulations, and it did not help. So financial history is on my side. Financial history is on the side of currency debasement. Financial history is on the side of stagflate, tax lie. Many, many centuries. Oh, interesting comments here. Crypto coins are coming. Yes, so they can do even more currency debasement with backdoor government cheat codes. Have you ever played video games, bro? And how many exponential technologies has there been since the internet? Okay, the internet was definitely deflationary and allowed outsourcing. If you read Peter Thiel's 0 to 1, a lot of the technology for decades now has been incremental, which is not deflationary. Incremental improvements in your iPhone is not deflationary, especially when Apple is jacking the prices up and taking the chargers out and nickel and diming you and raising the price. So unless there is exponential improvements in technology, not incrementalism, not marginal improvements. So yes, I'm familiar with Jeff Rose's, well, there's another deflationist out there that technology is going to go exponential and then it's going to create deflation. Peter Thiel wrote a book about the exact opposite, from 0 to 1. Okay, so the global pandemic, back to this article from Andrew Taylor, got a little off topic there. Andrew Taylor, Yahoo AP, from Thursday, October 8th. Actually, let me take a water break. Relief pushes U.S. budget deficit to a record $3.1 trillion. New eye-popping federal budget figures released Thursday show an enormous $3.1 trillion deficit in the just completed fiscal year, a record swelled by global pandemic spending that pushed the tally of red ink to 3 times that of last year. The CBO released the unofficial 2020 figure, saying the deficit equaled 15% of the economy. Huge gap that was the largest since the government undertook massive borrowing to finance the final year of World War II. Spent 6.6. So you can get the book. Sorry, last thing, I forgot that. You can get the book. This time is different. 8 Centuries of Financial Folly. Take a look at their research, charts, graphs, audiobook on Amazon or Audible from Carmen Reinhart, Ken Rogoff. So financial history is not on the side of long periods of deflation. Historically, governments and central banks like to deal with too much debt with currency debasement. Stagflate, tax lie, so worsening stagflation, more taxes, more rules, more regulations, more control of the economy, of course also blame capitalism, and then normally, in some instances, this can lead to hyperinflation. That is the worst case scenario. There are psychological components with hyperinflation. We'll see what happens. Massive figures expected, but still running more than double the previous deficit record of $1.4 trillion that was registered during former President Barack Obama's first year in office during the Great Recession 2009. Revenues also contributed to the bleak fiscal picture, falling $44 billion to $3.4 trillion as income tax receipts dropped almost 16% as the jobless rate spiked. Corporate income tax, the amount of taxes is going to fall even more, because we're going to see more restaurants fail, more bricks and mortar retailers fail. Corporate income taxes dropped by 21%, even as Social Security and Medicare payroll taxes climbed 5%. Economists say the most significant measure of government deficits is to compare them to the gross domestic product. I don't think that that's true. I think the gross domestic product's bullshit. By that score, the flood of red ink in 2020 still blew past Obama's 2009 record, in which the deficit almost hit 10% of GDP. CBO estimate is only preliminary, though, based on daily Treasury reports, but is likely to match the official numbers due from Treasury and the White House Budget Office later this month. Figures come as Washington has been debating another round of stimulus or MMT checks and bailouts. The yield curve, actually, most of the yield curve from the 1-month Treasury to the 10-year is still within under 70 basis points. So it has not moved a lot, but I think you're starting to see movements now in the longer dated U.S. Treasuries. The 20-year and the 30-year is starting to realize the budget deficits and all the problems. So the Fed may have to start monetizing even more of the 20-year and 30-year U.S. Treasuries if the yields start to spike. And there was an interesting article that just came out today, October 14th. The Treasury market may be so big that the Fed can't step away, by Benjamin Purvis and Katerina Sereva. This is from Bloomberg. The Treasury market is now so large that the U.S. Central Bank may have to continue to be involved to keep it functioning properly, according to the Federal Reserve Vice Chairman for Supervision, Randall Quarles. The U.S. rates market has faced several significant dislocations in the past couple of years, most notably in March when the pandemic roiled global assets. In response, the Fed has expanded before the Fed started manipulating with press releases and guarantees where they actually didn't really buy anything, hardly anything. They're still manipulating the markets, but they're just doing it differently. They didn't actually have to expand the balance sheet as much as everyone thought, yet. In response, the balance sheet's still going way over 10 trillion in the not too distant future. In response, the Fed has expanded the toolkit. It's probably more than that if there was an actual audit, an honest audit of the Fed's balance sheet. Expanded the toolkit it uses to help ensure market stability, including the implementation of new repurchase operation facilities and swap lines. It also restarted direct purchases in the bond market and is still buying about 80 billion of treasuries a month. Also, remember from the shows in the last week or so, the amount of mortgage-backed securities the Fed is now buying, and that Wall Street banks they figured out a new scheme. They're getting the Fed to buy these new mortgage-backed securities that the banks are creating or already bought in March, and the banks are dumping these at very large profits onto the Fed's balance sheet. Meanwhile, America's debt pile has exploded to more than 20 trillion from roughly 13 trillion. Okay, we're at 27. We just crossed 27 trillion, so I don't know why they subtracted 7 trillion from roughly 13 trillion 5 years ago. And the economic, because this article is from today, the economic fallout from the pandemic means it is set to expand even more. The Treasury market may now be so large that it may have outpaced the ability of the private sector to cope during periods of stress, meaning that they can't shove any more down the throats of pension funds, which are also going to need bailouts. Large corporations are cutting back. The banks might even have too much or have to slow down how much they purchase, because it looks like some of the banks may be in trouble with the commercial real estate problems. Quarles said at a virtual panel discussion Wednesday, that means that there's an, quote, I added some of that analysis in there. There's an, quote, open question, one that Quarles said he has yet to arrive at an answer on, about whether there will be an indefinite need for the Fed to participate as a purchaser to support market functioning. He said, quote, it may be that there is a simple macro fact that the Treasury market being so much larger than it was even a few years ago, much larger than it was a decade ago, and now really much larger than it was even a few years ago, that the sheer volume there may have outpaced the ability of the private market infrastructure to support the stress of any sort there, quote, end quote, Quarles said. One of the main problems is that foreigners, overall, the amount that net purchases of foreigners the last 3 months, there's been a decent increase in net purchases of U.S. Treasuries. But if you compare the amount of Treasuries that foreign governments and foreign central banks were buying, it is nowhere near the levels before the pandemic. So there was a little recovery the last 3 months, but overall, we are nowhere near the levels of the last 5 to 10 years that foreigners were recycling from positive trade surpluses on this global dollar standard that we're on, that they were recycling those dollars earned from global trade back into Treasuries. So that is another sign that the global economy is not functioning that well right now, that the recovery in many other countries is not that good. I can't believe someone said in here that a government digital currency, someone in the comment section here said that the government digital currency, a crypto dollar, will be deflationary. It will not be deflationary. A government cryptocurrency will not be deflationary. There will be, if you've ever played video games and you know how cheat codes work, there will be an unlimited backdoor cheat code. There will be no transparency. They will say there will be they might say there will be transparency. Oh, with this government cryptocurrency, we will have the most transparent money supply in the history. In the history of money supplies. Sure, okay, sure. Don't believe you. If you played computer games, if you played video games, people are always looking for that cheat code. And the government's no exception. It'll just be easier for them to penalize people like me. I mean, YouTube's already penalizing me. I think I'm going to probably get $5 in ad revenues from this video. Even if I spent hours finding the articles or piecing together the collage there. There's a poll that was done. I'll attach the video at the end of this. It was from The Hill. It was a poll done back in August that 55% of Americans now support universal basic income and MMT. So why do you think you're seeing tweets sent on your screen from President Trump? Republicans are okay with it now too, especially asset price inflation. And Democrats are fighting over themselves to hand out checks to get votes. Because they're looking at the polling. So yes, there might be temporary deflation. It will just be another excuse for more manipulation, more stimulus, more bailouts. And if the dollar is too strong, that's another excuse for more manipulation, more stimulus, more currency devaluation. Oh, the dollar's too strong. It's hurting. It's hurting. It's hurting everyday Americans with more purchasing power. Dollar's too strong. You can't have any increases in purchasing power. That's not allowed. Oh, the computer improved over the last 20 years? And the price of a computer fell. Okay, that's great. That's great. One or two prices fell over the last 20 years. But can you eat a computer? Can you use a computer to pay for your monthly healthcare bill? Healthcare, food, rent. Rent over the last... For the pandemic, rent prices are down. Even here in the DC metro area, which is pretty shocking, considering how insulated the federal government is. But Congress is on their little break there. Well, they were on a little break. I think they're still on a break. I think it was a 14-day break, right? They needed their break because there will be riots here in the DC metro area if both political parties in Congress... Actually, no, they had the hearings. They had the hearings for Judge Amy Coney Barrett. But I think the other Congress people might be on some breaks. That might have been a temporary one. They may have allowed that. The majority of Congress, I thought, was on a break. Tom Lee says, no cheat codes for the disappearing middle class. 100% agreed. The cheat codes are for Wall Street. The cheat codes are for large corporations. The cheat codes are for the parasites, the swamp creatures in both political parties, politicians and bureaucrats here in DC. That if you took away the Michelin star restaurants, you took away the high-end hookers, you took away the sugar babies, and you took away the cocaine, there would be riots in the streets here in the DC metro area. This place literally is the modern-day version of the Roman Empire. I have so many not safe for work stories that even if I set them on my Patreon would get pissed. I have tons and tons of stories. Maybe in person with a beer or two, I'll talk about them. Can't talk about them in public. That's how not safe for work they are. They are literally no children under 17 and XXX rated. About the government employees, the politicians and bureaucrats, and their nasty, crazy, dirty, expensive habits. Okay, let me check the collage here and see if I covered everything. So we got the Trump tweet, how based on polling now, you have the Republicans, you have the Trump conservatives, you have the regular Republicans and the Democrats fighting over themselves to try to hand out MMT, universal basic income checks, because that's what the polling says. So they're trying to buy votes. But all of this only works with fiat currency because the dollar is world reserve currency. They think that they can get away with it right now because the dollar index is stuck in the tug of war. Dollar index is at 93.46. Do you think if the dollar was weaker than that, do you think they'd be able to get away with this stuff? Probably not. So they think that they can get away with all these payments and spending. And the Fed can monetize even more treasuries. For a short amount of time, they can get away with it. We'll see. We'll see how long that they can get away with it for. But in general, overall, the trend, except for the last 3 months, there has been a little bit of an increase in net foreign purchases of U.S. Treasuries, but it is nowhere near the levels of the last 5 to 10 years for foreigners buying Treasuries. Okay, well, that's it for this live stream show. About 30 minutes here. I'm feeling actually pretty good. I'll take a look at the Super Chat questions now. Some dude put 100 messages in the live stream show chat about I'm wrong. He also said that Fed coin or crypto dollar would be deflationary. And then he's saying that all technology, that there will be a miraculous technology silver bullet out there that will create deflation for everyone. You know, I hope he's right. I don't invest in hope. I prepare and expect for the worst, and I hope for the best. But I see more and more dystopian. Okay, thank you for the $5 super chat, Sean. Hey, Jason, if Americans keep using their stimulus checks to pay down debt, isn't that initially deflationary? Will inflation come later with more MMT? This is an excellent question from Sean. So that would be partially deflationary, but the U.S. economy, it does not exist in a vacuum. We have a global economy, and the U.S. has to import a massive amount of goods and services that are reliant on other countries also behaving and with their treasury departments or finance ministries and their central banks not devaluing their currencies, which then, against the dollar, which then leak into different supply chains and other distortions, and then cause shrinkflation and stagflation and other currency debasement and inflation, and then the U.S. imports that. So the average person that is saying the deflationistas are only looking at the U.S. economy, and they are only seeing that, oh, debt's paid down. Therefore, that is deflationary. If you look at the whole picture of the global economy and how global trade works, if there's less goods and services being produced, and there's less or the same goods and services being produced, and right now there's nowhere near the amount of goods and services being produced as before the pandemic. There's a lot of industries where the production levels are down a lot. And then the policy responses, the monetary and fiscal policy responses from most of these governments has been absolutely enormous with currency and credit creation. There is only someone who is ignoring reality would say that there is not more currency and credit right now chasing the same or fewer goods and services. Now, what you could say is that might be temporary, but I've also had deflationists for the last 12 years telling me that inflation, that the costs of certain goods going up would be temporary. And that was 10 or 12 years ago when I first got into this. So I had people lecturing me that, oh, your grocery bill going up, or oh, that price increase at the restaurant, or oh, your healthcare bill's going up. Oh, that was only temporary for the next year or two. Don't worry about it. It's only going to be temporary. And then here we are. So the government does not measure any of this accurately. No government does. And it's in their incentive to not measure it accurately. Because if they honestly reported cost of living adjustments, there's no way the governments could pay out. With Social Security, government employee retirement plans, all these things, the cost of living adjustments that are indexed to the consumer price indexes. So yes, that would be partially deflationary, but you have to look at, even if the US economy is running at current levels, we're still importing a lot of groceries. Okay, so there's still a lot of goods that are being imported here to the US, food and other items. And there was a big, I did a story on this, there was a big increase in Brazilian soybeans. There's tons of other examples. Brazilian soybeans year over year, 65% increase on a number of factors, Chinese demand and currency devaluation of the Brazilian real against the dollar. So there's a lot of factors involved, and the average deflationist is two of the most common mistakes for the average deflationist is, number one, they believe in all the government statistics, and number two, they believe that the US economy is in a vacuum. The majority of the stagflation, the shrinkflation for the US is coming in through the imports, through the goods and services the US has to import, and how other countries and their supply chains deal with monetary and fiscal policy, because they want weaker currencies against the dollar. They're using the same playbook that the Federal Reserve Bank is, the US Treasury wants. All these other countries are trying to do similar things. Can everyone do Japanification? Can everyone do stagflate, tax, and lie at the same time? The governments are hoping that they can. The reality is much different. And then last part of your question here, let me take a quick water break. Will inflation come later with more MMT? Well, if you're looking at government statistics, I don't know if they're going to show any inflation at all. George Gammon has covered this, others. I mean, there's so many substitution, hedonics, geometric weighting. If a good rises, the way the government inflation data with consumer price index works, if a certain good rises too quickly, they just pull it. They say, out of this basket of goods, this good is rising too quickly. So the government economists at the Bureau of Labor Statistics and Department of Labor, whoever else makes the calculations, will make an assumption that the consumer will not want to buy steak, will not want to buy chicken, or will not want to buy pork because the costs are rising too quickly. They will not want to maintain the same standard of living. They will substitute. So there's all these assumptions built into all this government economic data that the average person on Main Street does not understand. And then there's chain CPI that George Gammon made a video out about, and him and I discussed over the last couple months. So MMT, Universal Basic Income, MMT, it would be very inflationary because those people would not be producing new goods and services. They would just be consuming. There might actually be less goods and services in the economy, and there would be more currency and credit chasing the same or fewer goods and services being produced, which is not good for the economy overall. It's actually hollowing out the economy even more than it already is. So I don't know if the government economic data will show that inflation from MMT stimulus and universal basic income, the bailout checks. But it will be in the reality for your bills, for things that you spend on every day, for food, healthcare. We'll see about rent, because a lot of people are leaving cities now. So there's a big difference between government economic data and reality. Super chat from Tom Lee. He says he appreciates my work. He says, thanks. You're welcome, Tom. You know, we had a little heated exchange a couple days ago. I get trolled a lot. There's a lot of trolls. Some woman had a really mental illness breakdown and wrote 3 or 4 really nasty paragraphs about me a few days ago. It was horrible. Got called all kinds of names. My God. Can't believe what she said. And I spent 3 hours on that YouTube video, pulling all the articles, making the collage, and she said, how dare I, called me all kinds of names, how dare I try to make a living off of my content? How dare I ask people to chip in $5 a month? When YouTube is taking all my ad revenues now. I'm going to make $5 on this video. That's how little. So if I spend 3 or 4 hours on a video, my Google AdWords revenues are going to be like $5 a video now. I need to go find a paid advertiser. That's the truth. It's looking like I'm going to lose about $2,000 a month now from people canceling on Patreon and loss of Google AdWords revenues. So I'm probably going to have to go find a paid advertiser to go replace the lost income. People have to make sacrifices. For the value behind the paywall and the Patreon, I don't think anyone could touch that $5 a month. There are over 100 articles there. Some of the articles I spent 10, 20 hours writing, researching, pulling sources, taking screenshots out of government research, out of Federal Reserve research papers, research reports. There's an insane amount of research behind the paywall for only $5 a month. No one charges anything close to that. Normally, that type of stuff is way, way more than that. But I want the average person on Main Street, the average Joe and Jane six-pack to have a chance. Because they're not going to talk about stagflating tax and lie on CNBC or Bloomberg. They're not going to talk about it. They're going to say there's not enough inflation. Deflation's the enemy. Okay, good super chat question here from Derek Soderberg. Thank you for the $10. He says, do small banks perform well through periods of hyperinflation as they own a lot of assets? No, because a lot of small banks take a lot of extra credit risk and a lot of extra risk in normally, especially American banks. So a lot of the smaller American banks prior to the 2008 financial crisis, they had even more subprime loans. A lot of the smaller American banks now, they have enormous commercial real estate mortgage-backed security exposure. Some of those smaller American banks have over 100% of their assets that are leveraged. They leverage their balance sheet enormously. So their balance sheets are leveraged over 100% in commercial real estate mortgage-backed securities and shale oil debt. And the small banks do not get the easy bailouts, the easy currency and credit, the easy reserve replenishment to go and gamble at the casino that the large banks do, like your JP Morgan, your Citibank, your Wells Fargo, your Bank of America, that actually own the Fed. So the deck is stacked against a lot of the small banks. The Puerto Rico banks they've been through a depression for the last 20 years. There was an interesting thesis. If you want to do some research on this, Derek, there was a guest on Grant Williams' free podcast in the last 2 or 3 months, and he outlined an interesting thesis on Puerto Rican banks because it looks like they're going to get a lot of the new medical production facilities for vaccines and medical supplies. They're going to get those, and the banks might benefit. So you might want to take a look there. But in general, the small banks do not have access to the currency and credit that the Federal Reserve does. They don't get the easy bailouts. The small banks do not get access to the easy currency and credit that the large banks that own the Fed do, the 5 or 6 largest banks, and then they don't get the bailouts that the large banks do, and there's all these hoops and hurdles and rules and regulations and red tape that the small banks have to go through to get any help from the Federal Reserve. And the small banks also take a lot more credit risk with their loans. So the small banks are doing a lot more subprime credit card loans. They're taking a lot more risk with leverage loans. Some of them have large leverage loan portfolios. They're taking larger risk with credit card loans. So no, I would not want any of the, excuse me. Wow, my memory's starting to go. I should probably shut this down since I'm way too long. I would not take any risk with a lot of the small banks here in the U.S. If you are making profits on those, I would think about hedging. I would think about hedging those trades, taking gains off the table the more you make, because their balance sheets are very leveraged and they have a lot of dicey assets. And people think, oh, in a hyperinflation that wipes the debt away. Also, if the banks are not investing properly, they get in trouble too. Unless the Fed is handing them dollars so they can go buy gold or go buy real estate or go buy other hard assets. So the asset quality of a lot of these small banks here in the US is not very good. They've taken a lot of credit risk and they've leveraged up to buy a lot of risky derivatives. Okay, well, that's it for this live stream show. I don't want to go any longer. My memories, I already noticed in the last couple of minutes, it's starting to have some faults here. But I did get a solid 40-something minutes out of this, so that's good at least. So I want to thank everyone for listening. Thank you very much to my over 1,000 Patreon account contributors per month. Only $5 a month behind the paywall. Lots of articles. I just put out an interesting article about the industries that have the most debt. So if you want to take a look on that, there's tons of articles on gold and silver miners, individual gold miners, royalty and streaming companies. There was an extensive oil industry article out in the last, I think, 2 or 3 weeks. A lot of silver mining articles. And then probably over the next couple weeks, there will be another uranium article, as some of the uranium stocks have crashed, and there might be a buying opportunity there. And then a natural gas article, because long term, the largest demand increases in the energy sector, and especially considering that natural gas is not radioactive, the largest long-term demand increases are going to come from natural gas, I think. At least that's how a lot of the purchasing orders are coming for a lot of utilities. Okay, that's it for right now.